Joining us with more on the markets, Gabriela Santos, JPMorgan Asset Management, a chief market strategist for the Americas. And you don't sound in looking at your notes in the mid-year check, Gabriela, you don't sound that bullish, really. You kind of sound how you did it at the lows. You didn't say we weren't going to go back up, but you didn't really. No one expected us to just bounce right back to where we are so quick, to new highs so quickly. In this, because tariffs, not that much has changed. We just become used to it almost.
Exactly. I think policy at this point has gone from being an acute to a chronic issue for markets. So not driving the day-to-day based on the latest headlines, but something that's more under the surface, driving specific stock or asset class performance. Right. In terms of the view, I think it's fine for the macroeconomy overall. Recession risk has come down off the worst parts in early April. It's a little bit below potential growth, a little higher inflation, elevated rates. That's a fine environment for earnings growth. High single digits, totally doable this year. The problem is exactly how quickly the market already recovered. Almost at this point, 100% of its sell-off for equities, 80% for corporate credit. So really, in the U.S., it's tough to have a wholesale, very bullish, overweight view across the board. But that said, I think there's plenty of stuff to do. Maybe asset classes that haven't rallied as much, that we still believe in, or where maybe the performance has, but not necessarily the flows and the positioning. And two come to mind. We continue to think about this massive change that's just started in international performance, been all about Europe, Europe, Europe. Our interest is still very much in Asia as well. So think about Japan, India, which have really lagged this year, but are great stories. Or in the U.S., where performance has bounced back, but not interest in flows, things like financials, which is much more of a story of a steepening curve.
So we're viewing policy as moving from an acute problem to a chronic problem. Is there any way that we're missing the bigger picture on some of the positive things that have happened? Not just with deregulation, but even with some of the things we're seeing with the effects of tariffs, things coming back here, other countries promising to invest here, our own companies promising to invest here. Maybe we're missing it, and we are not range bound for the next half of the year. What if the policy tailwinds, in fact, policy issues you talk about are in fact tailwinds and not headwinds?
Yeah, and I use the word issue as in like concept development.
But you're not bullish, so you said range bound.
Problem.
Right?
But I think it's just at the index level that comment applies. I think a chronic issue is an issue you still need to pay attention to, and that can be a good thing or a bad thing. Take the example of financials, right, where we really have seen progress in this idea of more business-friendly regulation. Just the vote this week to lower the supplementary leverage ratio, something that can really free up lending again, that can decrease the burden of holding things like treasuries in terms of capital requirements. So it's a hugely positive development.
Well, let me ask you this: could it rear its ugly head into an acute problem again if countries resist signing trade deals and we get back in an acceleration of the trade war issue instead of a range-bound market from back to the highs? Can we go back and test the lows?
Yeah, we didn't see April coming.
So I think, true. I mean, if something like that completely off the base case that raises recession risk again, then that's something that needs to be priced in again. I think in terms of the trade issue, I think it's more that markets have understood where we are rather than it's not something that's changed. So where we are right now is an average tariff rate of 15%. That's still 5 times higher than where we started the year. It'll still have impacts on a company-by-company basis, depending on where they get their supplies, where they source their revenue, what their pricing power is. But for the market overall, if 15% is where we settled, then all right, got it. And the market moves on to
the White House yesterday.